Go ahead, Mike. Why don't you tell us about the FHA profit and loss program?
So this program is very unique. It's one of those programs that comes around and your mind is kind of blown when you see it because it almost sounds too good to be true. So when you're a self-employed borrower, you have two different options to qualify for a loan. The number one and most popular option is to just provide a full documentation loan, right? So sometimes this, I would say 99% of the time, if you're a business owner, this hurts you, right? The main thing of being a business owner is you want to write off your taxes. You have business expenses that you want to write off. So at the end of the year, when you file your taxes with the IRS, you're not getting slapped with $20,000, $30,000 plus bill that you owe the IRS. So in order to reduce that taxable income, you need to apply your business expenses, right? So business expenses are across the board, different business expenses for different businesses. This loan allows you to qualify without tax returns. So you don't have to worry about the headache or the stress of having to figure out how to navigate through that whole, loophole of, okay, how do I get my business expenses and my taxable income to be high enough so I can still qualify for a loan? That completely eliminates the need for documentation as
Okay,
far as
so
W-2s or
let's
tax
just,
returns.
all right, I'm going to interrupt you. So let's just back up. So a self-employed borrower, a business owner with this program does not need to show their tax returns.
Correct. So this is one of those loans that you can opt in to qualify without tax returns, without W-2s, 1099s, or even bank statements. So it simplifies the process by allowing you to only provide profit and loss statement, a balance sheet, and then if you don't have a profit and loss statement or a balance sheet, you'll need a letter from a CPA to verify that you've been in business for 2 years, as well as they verified that they've done your taxes for the last 2 years. The reason for that is because you can't qualify for a mortgage if you're not up to date with the IRS and paying your taxes. So that's another thing that you have to be aware of.
Okay, so that sounds almost like 2005 and 6 stated income. You can just write down how much you make and qualify. It sounds like that.
Yeah. So this time it's a little different because you do need a letter to attest that you've been in business for the last 2 years. So you're going to need a CPA or a tax preparer to write a letter for you on your behalf with your business license number, as well as a letter to attest that this loan will not affect the operations of the business. So it's similar to a standard profit and loss loan, except a standard profit and loss loan requires 20% down, and this is
Uh-huh.
an FHA profit and loss loan, so it only requires 3.5% down.
Okay, okay. And this, out of curiosity, does the tax preparer or the CPA need to verify the profit and loss statement, or just verify that you're in business and it won't affect your business?
No, they don't need to verify the profit and loss statement. All they need to do is verify that the business has been active for at least 2 years. And the way they do that is with your business license number. And then they need to verify that they've actually done your tax returns for one of the last 2 years. They need to attest that they've done them. So basically, just double crossing your T's, dotting your I's, and we're guaranteeing that you're, a good citizen and you've been
Okay,
paying the IRS and you're up to date
okay,
on your taxes.
okay. So that's a bit. I guess that's one of the benefits. Is not as much documentation as regular,
Yes.
traditional self-employed loans. And besides it sounds like it's too good